All right. Good afternoon, everyone. So, some of you have constantly asked, sir, can you teach us how to catch spikes without doing so much analysis? And so, I'm going to be showing you guys how to catch spikes without using so much indicators on your chart or trying to figure out the technicalities with SMC. So, but we're going to set the rules and know some of. So, this is some of the indicators we are using. So, this is on 5 minute time frame because I want a situation whereby you're entering and then you're using a small stop loss. Please note this strategy works in every financial market out there. Okay, and all you have to do is understand the rules. If you can understand the rules, you should be good to go. Okay, so some of the things you need to take note of first is the indicators. So we're using the first indicators, we're using fractal, Williams fractal. Then the next one we're using BB, Bollinger Band percentage, and they are both default. So what happens is this: for boom pairs, remember we are buying. Just have this in mind. For boom pairs, we buy. For crash pairs, for crash pairs, we sell. And so we buy once BB is at oversold, and we sell once BB is at overbought, after which we can wait for a breakout. So, but before I go ahead, now understand the reason why we have the fractal is to spot what we call diagonal breakouts. The fractals enables us spot diagonal breakouts. And so why this is also good is the fact that the fractal helps you identify those minor supports, those minor resistance, which some of you, due to lack of experience, will be unable to figure out. So the fractal just brings it out in clear view, because sometimes when the market is in an uptrend, you have situations like this. The fractal is being deposited at these diagonal resistances such that you can connect your trend line and continue with the trend. You have situation like this. Fractal shows at this point such that after your trend line break, so that is pretty much the strategy. All right. And so when we are in a downtrend, you have diagonal move towards the upside, diagonal move towards the upside. You connect your trend line, breakout, diagonal moves towards the upside. All right. Okay, so cool. Now, the next thing we need to understand is what the trend. All right, so I'm just going to move the drawings. So if you've not written this down, take note. These are the rules. For boom pairs we buy, and then for crash pairs we sell. Okay. So let's go to the chart. This is Boom 1000. I'm going to first teach you guys without the trend and then teach you with the trend. It works per pair, so it works both ways. Okay, so now we have for boom pairs, we say we are buying, right? Now, BB band gets to the what? Oversold. All you have to do is spot your fractals. They need to give you what? A diagonal. You need to see something like this towards the downside so that you can draw your trend line and then anticipate the breakout, put your stop loss beneath, and then your entry is at this point because you expect the market to move upwards. Okay, so what do we have? Your fractals and then this is the candle that led to the breakout, and so you can take a buy position at this breakout, set your stop loss beneath the previous candle, and once you start seeing the spikes coming in, you can take your profit or hold. But this is obviously a downtrend, so it's not one of those kind of opportunities I'm going to say you should hold so much. Now, another example is this. Look at this fractal touching the oversold. You connect your diagonal breakout. And now, in situations whereby the breakout occurs, like the spike has one, two, three spikes before the breakout, it is too much because the stop loss becomes longer. But naturally, your stop loss is supposed to be at the previous candle. But in such cases where a lot of spikes have already occurred, all you can do is ignore that particular trade. At most one or two spikes, but we have one, two, three, four spikes occurring before the breakout happened. All right. And this works also with the trend. So one of the indicators you all know I like using to identify the trend is the Ichimoku cloud. And so whenever price is in a downtrend, all you have to do is wait for the BB band to be what? At the overbought. Remember, we sell at overbought and buy at what? Oversold. And so the moment BB band got to this point, to the over, is this, sometimes it gets confusing. This is overbought, right? Oversold. All right, so this is the oversold level, and then we connect our two fractals. Are you seeing? And so you can enter after this. Now, these are against spikes, but I'm just trying to show you that it works. It works everywhere. Now, look at another example. Now, look at this one. It's very interesting. Now, we had BB Band got to the what? Oversold. Sorry, overbought level. Why this is the oversold. Sorry about that. But now it's just one fractal we had. We need to have like two fractals so that we can connect our trend line. All right. So look at another example here. Okay, so this didn't get to the what, else would have connected these two fractals and sell, of course. So this was a major, massive trade at this point, which actually gave us 1:3, even more than that. But I just like taking my profits. If we had two fractals here, would have had another 1:3. All right, so let's look at buy examples. So once price is above the cloud, you just wait for it to touch the bottom part of the BB band, and then you draw your fractal breakout. So in this case, a breakout occurred, our stop loss is below, and we had good spikes that occurred because price is above the cloud. Now look at this situation here. It touched, but there was no proper breakout, and as such, we can't take the trade. So it also prevents you from a lot of false trades. Now look at this particular one. It touched the oversold, right? Yeah, oversold, and so we draw connecting to fractals and boom. So the BB band helps a lot, and it's about to rain. Look at the sell example. So this is applicable in every market. This is applicable in every market. Let's look at the crash. Let's just look at crash 300 before the rain starts coming in so much so that you'll be able to hear me. Now look, these are by examples. I marked by examples, price above the cloud, and you can see how it moved by examples. Now let's look for sell examples. Now look at this point, but the breakout occurred outside the cloud, it would only take experience to take such kind of trades. But let's look for the type of trades we usually look out for. So if any of these, one, two, three, touched this point, would have had nice breakout trades, nice breakout trades. All right. This also because they were beneath the cloud, indicating a downtrend. We had one here, all right. We had one here, but it didn't last. And if you notice, this spike was too long, covering almost all the candles. So I wouldn't advise you take such kind of trades. Okay. Apart from the Ichimoku, there are indicators like the moving average that will be able to accommodate situations like this and still tell you you are in a downtrend. You can see this. Sorry about the rain, but the most important thing is you are getting the information. Now, this was a perfect example. It touched the overbought level, and so connecting these together, the breakout happened, and we have that. This touched the overbought level. We have two scenarios where it touched. The first one was not so good, that is this particular one, but the second one was good. You have the breakout here, stop loss above. This would have, if you held for long, you would have been stopped out, all right, but this second one was pretty much good. So it works on, even if you look at volatilities to show you how effective it is, it works on volatilities, price beneath the cloud, touches, draw your trend line to mark, and you can see the massive profits you had there. Let's look for buy. Okay, look at this. I mean, it's just wonderful. So, but the focus was catching spikes. Let's look at Crash 500. It does so well, even trading against spikes. Um, I'm pretty. Let's go to 15 minutes. Maybe I would see better examples. I'm just seeing lots of. All right, look at this. Take a look at this, guys. Price beneath the cloud, indicating a downtrend, and then you have this. Touch the what overbought, touch the what overbought, and then these are two fractals, fractal one and fractal two, and then you have that massive set towards the downside. So I initially switched to the 5 minutes because of we need more opportunities. This is just a cool way you can catch spikes. All right, God bless you.